There are no comparable mega-cap road stocks with a volume increase of 30 to 35% trading at my number, 40 times earnings, and Tesla is still extremely cheap. The adoption of EVs is skyrocketing. Take California, where it is currently 177%. In China, it is 22%. And the greatest way to capitalize on this growing trend of EV adoption is with Tesla. Once more, I believe that the following few months will be filled with catalysts: Investor Day, a blockbuster first quarter, Cybertruck, an FSD single-stack product that will enhance that, megapacks, and a host of other events. This reminds me a lot of the end of 2019 when we were anticipating 2020 due to all the developments in the financial and electric vehicle industries. There are moments that send shockwaves through the market, and this one is no exception. A financial titan with insights that have the power to completely change the Tesla landscape and beyond. We're delving into the mystery piece by thrilling piece today, as he drops information bombs that have the power to change the path of history. This is not your typical stock news, rather, it's a surprise that will make you reevaluate your assumptions, stimulate your curiosity, and pique your creativity. Keep checking back as we explore the facts, figures, and prospects for Tesla, electric cars, and the financial industry as a whole. The investing world is about to be rocked by the message Gary Black has to share. Are you prepared? Gary Black, the finance guru, has made a groundbreaking discovery that might drastically alter Tesla and the electric vehicle market. Come along as we interpret his observations, solve the puzzle, and consider the implications for both enthusiasts and investors. A voyage that will provoke thought and spark the imagination is coming up. Stay tuned. This is not your typical stock news, rather, it's a discovery with the potential to alter human history. Please remember to like and subscribe to our channel first, though. You won't want to miss this Tesla stock news event. Now, let's get going. The market for electric vehicles is getting more and more competitive. A lot of electric vehicle manufacturers are having to deal with more competition, which is steadily hurting their market share. It's possible that some of these businesses will be entirely eliminated from the EV market in the not-too-distant future. At $32,000 after a rebate, Tesla's Model 3 is currently more affordable than the average cost of a car with a traditional internal combustion engine in the US. But Elon Musk's bold proposal to launch a $225,000 Tesla model in the next 2 to 3 years would shift the game and speed up EV manufacturing considerably. Let's focus on a growing earnings warning regarding Ford in the meanwhile. The company's shares have suffered since its revenue and profit figures didn't live up to expectations. The CEO of Ford, Jim Farley, has been underlining the company's continued commitment to getting hybrid cars priority, despite the declining demand for electric vehicles in the U.S. It's important to note that Ford again failed to meet its goals for profit and revenue in the third quarter. Along with the effects of the UAW strike, one of the contributing factors is the ongoing issue of warranty expenses, which presents difficulties for the business. As the top American EV manufacturer at the moment, Tesla is expected to maintain this position in spite of the difficult market conditions. A lot of other EV manufacturers are finding it difficult to compete with Tesla since it has been increasing its fleet of EVs and increasing manufacturing. A few of these businesses are even thinking about dropping out of the competition entirely. Today, we'll examine the reasons behind the revisions made by other automakers to their estimates of EV sales, as well as any possible ramifications for Tesla's shares. There are concerns regarding Tesla's classification when assessing its stock. Is it a tech firm or an auto company first and foremost? With Tesla predicted to generate $100 billion in revenue and rising at an impressive rate of 4% per year, a six-fold revenue multiple seems reasonable. Additionally, Tesla continues to turn a profit and maintains a competitive advantage in manufacturing and over-the-air software capabilities, areas in which other businesses find it difficult to match its expertise. Whether Chinese manufacturers can threaten Tesla's dominance with their cost-effective battery technology and manufacturing procedures is the main question. Because of its environmental friendliness, cutting-edge technology, and government incentives, electric vehicles, EVs, are becoming increasingly popular among consumers. This is especially true in light of Tesla's industry-leading production facilities and quick over-the-air software updates. But not every massive automaker is having the same amount of success in the EV space. Notable companies like Ford, GM, and Toyota have recently updated their estimates for EV sales through 2023 and beyond, noting a number of unknowns and difficulties. This change may have far-reaching effects and strengthen Tesla's position as a leader in a congested electric vehicle market. What factors, then, led these automakers to decide to reduce their forecasts for EV sales? The global shortage of semiconductors is one of the main reasons why some automakers have revised their EV sales predictions below. Wide-ranging effects of this scarcity include a disruption in the supply and manufacturing of vital parts for electric vehicles. Fit Solutions claims that the shortage of chips has significantly impacted the growth of EV sales in 2022, hence harming a large number of firms. For example, a well-known company in the auto business, Toyota, was forced to significantly modify their estimate for electric vehicle sales. The corporation has cut its initial estimate from 202,000 to 123,000 units, an almost 40% reduction. The difficulties encountered in the Chinese market, where the scarcity of semiconductors has intensified the already intense price rivalry, are reflected in this notable decline. In spite of these difficulties, Toyota expects the fiscal year to see strong overall growth. However, the corporation is deliberately refocusing its attention on hybrid vehicles in response to the chip shortage and increased pricing rivalry in the EV industry. By making this calculated strategic change, Toyota is still able to reach its total sales goals while reducing some of the risks and difficulties brought on by the lack of semiconductors. However, even though the business projects sales of over 9.6 million cars in this fiscal year, EV sales will represent a smaller portion of its total portfolio. Fundamentally, the worldwide scarcity of semiconductors has compelled automakers such as Toyota to reassess their forecasts for electric vehicle sales and implement substitute tactics to maneuver through these difficult market circumstances. This could have a significant influence on the EV terrain and possibly reinforce Tesla's standing as a leading player in the sector. One other important aspect that is causing several automakers to reevaluate their estimates for electric vehicle sales is the extensive delivery delays brought on by the ongoing epidemic. These delays have had two effects. They have raised the risk of shipping autos across different parts of the world, in addition to driving up shipping costs. Consequently, a number of significant industry participants have been forced to undertake tactical changes. For example, Ford's ambitious aim of reaching 600,000 EV production units has been delayed by 1 year due to deferred EV manufacturing investments totaling nearly $12 billion. In a similar vein, General Motors has chosen to delay the release of several EV vehicles in order to protect its pricing policies. It's critical to understand that, aside from Tesla, the majority of other EV manufacturers are dealing with the fallout from declining prices in the face of these logistical obstacles. Ford, for example, recently retracted its projection for full-year results, citing ongoing pressure on electric cars. Remarkably, the business allegedly suffered losses valued at exceeding the $3,235 losses per EV incurred in the previous quarter, at $36,000 per each of the 36,000 electric vehicles it shipped to dealers in the third quarter. CEO Jim Farley revealed this strategic shift during Ford's July second quarter earnings briefing. He said the company plans to slow the growth of financially unprofitable EVs while refocusing resources on the commercial vehicle market and increasing sales of gas-electric hybrids over the next 5 years. The restricted capacity for and rising raw material costs, battery manufacturers like Panasonic and LG Energy Solution have issued warnings about an imminent downturn in the electric vehicle market. As a result of these battery-related issues, some automakers, including Honda, have given up on their aspirations to work with partners like GM to build affordable EVs. Why does Tesla care about any of this then? Given that a number of automakers are cutting their estimates for EV sales, Tesla has a great chance to increase its market share and solidify its position as the industry leader in EVs. Tesla has proven its tenacity by coming up with creative tactics and methods to deal with the difficulties posed by its rivals. To lessen the impact of the chip scarcity on production, the corporation, for instance, has proactively sourced alternative chips and modified its software. Additionally, Tesla has streamlined shipping operations, cut costs, and accelerated vehicle deliveries to customers by utilizing its global network of suppliers and manufacturers in addition to its direct sales approach. Tesla has strengthened its competitive edge through its proactive strategy to securing its battery supply and cutting costs through strategic relationships with battery suppliers like Panasonic and CATL, as well as in-house technology development. In the first half of 2023, Tesla sold over 57,000 battery electric vehicles, setting records and accounting for more than half of all BEV sales in the U.S. As a result, the company has continued to develop and perform well in the EV market. Despite fierce competition, the corporation has also grown its market share in important areas, including China and Europe. However, Tesla's accomplishments go beyond American boundaries. The business has advanced significantly worldwide, especially in important areas like China and Europe. Despite intense rivalry from domestic and international competitors, Tesla has succeeded in securing a growing market share. Tesla has established itself as a major competitor in the fiercely competitive and diverse Chinese auto market. Thanks to its amazing products, cutting-edge technology, and steadfast dedication to client happiness, the business has achieved incredible success. This has proven that Tesla can adapt to and thrive in a variety of difficult market situations, solidifying its position as a dominant player in the Chinese EV industry. In a similar vein, Tesla has succeeded in Europe, where national automotive customs and tastes differ, by combining cutting-edge technologies, sustainability, and performance. European consumers have taken a shine to Tesla, showing them loyalty and interest. Consequently, the company's market share is increasing, solidifying its worldwide presence. Tesla's success is a monument to creativity, tenacity, and an unwavering quest of perfection, rather than merely a matter of statistics. It is a reflection of the extraordinary transition occurring in the automotive industry, as well as the broader shift in consumer consciousness towards sustainable mobility. Tesla has demonstrated its versatility and dedication to reinventing what is possible in the world of electric vehicles by being able to not only survive but grow in the face of these hurdles. Rival manufacturers unintentionally boost Tesla's reputation and brand value in the EV industry by lowering their EV sales projections. By taking this calculated risk, Tesla is able to close the gap with its rivals and take advantage of the rising demand for EVs among consumers. Tesla can increase its market share by utilizing its production quality, design, performance, and customer satisfaction, while other firms continue to lower their projections and produce fewer EVs. In conclusion, as other automakers reduce their estimates for EV sales, Tesla stands to gain a great deal from their actions. Tesla can strengthen its position as the leading player in the EV market by taking advantage of the competition and utilizing its advantages. Here we have it. A number of automakers have had to lower their predictions for electric car sales because to the changing worldwide semiconductor shortage, pandemic-related shipping delays, and restricted battery production capacity. Despite the fact that many participants in the industry have been impacted by these difficulties, Tesla stands out as a strong and creative force ready to take advantage of the shifting market conditions. We'd love to hear your opinions as we come to an end to this discussion. How else can Tesla, in your opinion, take use of this chance to solidify its leadership in the EV market? How much do you think Tesla's stock is worth, and do you think its price will keep rising? Make sure you like this video and subscribe to Tesla Stock News for more updates on Tesla and the always changing world of electric automobiles. We appreciate you being here today, and we hope to see you in the upcoming video.